European stock markets are trading on the soft side this morning, with the UK's FTSE 100 index currently trading flat, while the Euro Stoxx 50 index is higher by about 0.3%. The currency markets, the euro is lower against the dollar, it's below 128, while the yen is also weaker, and that's on the back of a larger than expected amount of monetary stimulus by the Bank of Japan overnight, which exceeded market expectations. And in peripheral bond markets, Spanish and Italian bond yields are relatively calm. Spain has had a pretty decent debt auction, which has calmed some of the nerves in the market around the country. Good morning, I'm Ishaq, Siddiqi, and welcome to another daily market buy. I'm going to give you a quick roundup of what's going on and what we're looking ahead for later on in the session. So let's kick it off with Japan overnight. The Bank of Japan has pumped 50 trillion yen into the Japanese economy to target deflation. That was much better than expected, with the new Bank of Japan governor living up to expectations that the country is now on the path of aggressive monetary stimulus and easing for the foreseeable future. That's lifted the Nikkei overnight, giving the Asian markets a stronger session, which comes off from a weak session in the US yesterday, as we had a pretty poor ADP number and a pretty poor US ISM non-manufacturing number. So heading into the European trade this morning, we are contending with two policy meetings out of central banks, the Bank of England first and then the European Central Bank. Now, both banks are expected to stay on hold, with BOE expected to keep QE and rates where they are right now, and at the same time the ECB doing nothing to rates, although there is some cause for a rate cut by the ECB given the fact that we've had some poor Eurozone economic data. This week we've had some very poor services data and manufacturing data. Today we had the services data, which is actually a bit weak and showed a moderation in major nations like Germany, and a continued decline for countries such as Spain that are continuing to tackle the continuation of a deteriorating economy in this current environment. So investors are looking to the ECB to perhaps do something about it. At the same time, the ECB has a number of options when it comes to monetary stimulus. It's going to have a lot of pressure on it, given the recent Cypriot bailout and the inconclusive Italian elections, and the fact that we've got political gridlock in Italy, and at the moment right now we still don't have a strong indication of where what sort of government should be in place in Italy at the moment. That has unnerved investors, so we are looking for a possible rate cut. At the moment it is it is at this point right now where investors are unsure that the ECB is going to move. It's more likely that the ECB may hint at future policy measures to combat the deteriorating environment in the Eurozone. They could perhaps look at a continuation of the LTRO, the longer-term refinancing operation, to lend more to banks, or to lend or encourage lending to companies, and the most likely chance of a rate cut later on, maybe in the month of May, or possibly sometime in June. Other than that, we have a US weekly unemployment data report, which is going to come out around about lunchtime. The ADP data yesterday was actually a lot softer than expected, and that's got investors scaling back their expectations for Friday's payrolls release. The original number or market expectations were for about 200,000 jobs to be added by the US economy in the month of March. That number's out tomorrow. However, we have been scaling back those expectations, and we may see a weaker than expected number given the fact that ADP was poor. And if we see a poor weekly jobless claims report later on today, that's just going to cement that. Other than that, there's not much else going on. So I'll see you tomorrow, and we can discuss a bit more about the ECB and the BOE and the upcoming payrolls report. Thanks for watching. Tune in tomorrow.